Martin, let me start with you. I have to ask you about the Icon-Dell opposition. Icon obviously was on with you on Newell.
Yes.
And you famously had, some dealings. So what happens next?
Oh, I can't tell you what's going to happen in the Dell situation. I mean, Carl Icahn's is a very able navigator of this kind of situation. I only, dealt with him firsthand when it came to what happened with Jardine, and as everybody knows, I didn't want to have anything to do with getting in between activists. Mm-hmm. So I stepped aside.
I'm just looking at Newell on my screen here, Martin. It's down about 60% in a year. I remember when we had you back on the show earlier this year, you said there was no way that this company could wheel and deal its way out of the mess. It actually needed operational improvements. They have continued to wheel and deal, and they've continued to fall. Do you think they can turn it around?
Look, I'm rooting for them. There's a lot of people inside that company that I care about, which is why I got involved in the situation in the first place. It's definitely in my rearview mirror. I'm really not involved in it. I'm not a shareholder in it anymore. But as I said before, and I said again, until there are operational improvements in the business itself, you can't M&A your way out of it. And nothing has changed in that regard except for the stock price.
We're just going to show that on the screen, exactly what Ed is looking at. It's on my terminal as well. This is from the last time that you visited us until now. You can see the share price.
Grim reading. Yeah. Martin, would you go back if they asked you, if they said tomorrow you can come back, you can run the business the way you want to run it?
That ship has sailed for me. I'm very involved in other things. As you know, I'm involved with our new vehicle called J2, aptly named. And I still chair Platform Specialty Products and Nomad Foods, and co-chair Nomad Foods. So I'm busy. I've got my plate full, and no, I originally got involved in that situation to try to help, and my help wasn't required.
Well, you just mentioned that you have a lot of things going on. I presume you're talking about your SPAC. What kind of opportunities are you looking at?
I hate to call it a SPAC. The way we structure our vehicles is much more like one-shot private equity enterprises that are publicly listed than a SPAC. They're very different.
Isn't it the biggest SPAC in history, though? You should own it. That's a pretty cool moniker.
We've had a couple of them that I guess you could describe as the biggest ones ever done. And I haven't actually done the math of the size of all of the cumulative. I think we've deployed about $7.5 billion of equity across the various vehicles. Oh, it's got to be close to $100 billion worth of gross transactions.
So we can call
never really looked at it that way.
All right.
We can call it anything you want. The moniker is less important than what exactly you're looking at right now.
Well, the truth is we're looking at a lot of things. We've been looking at a lot of things. We've gotten pretty far down the road on some ideas. This is an environment where things are expensive. This is also an environment where the hedge fund community, which are a lot of our investors, are fairly skittish. They've been hurt, there's no secret about that, even though the markets overall, the indexes have gone up. Performance against those indexes for a lot of hedge funds have been challenged. Redemptions have been high. So we're very cognizant of that. And we're also very patient. We're disciplined. We don't know whether we're in the 7th inning, 8th inning, or 9th inning of this cycle, but we know we're in the last third of it. And it's a question of being disciplined and trying to make sure we execute on the right company.
What kind of things? Because J2 was recently linked with potentially being a buyer for some of the Newell assets. I think notably the card-playing business. Is that the kind of asset that you'll be looking at?
So the playing card business is much too small for our kind of vehicle. Mm-hmm. That would be a sort of family office type of investment. I'm not actually actively engaged in anything that's tied to Newell today. The kinds of businesses we look at, though, fit the 5 criteria we've always liked, which is we look for market leaders in niche markets. We look for businesses that have identifiable defensible moats around them, with a strong management organization, that have a history of good free cash flow generation, and that can be acquired at a reasonable multiple of those cash flows. That's our 5 boxes. If we don't tick all 5 of them, we're not going to do it.
Sure. So how many companies then are you looking at? Where are you looking? There's been a lot of activity in the restaurant space, for example, because your 5 criteria have always been true.
I get lost going out of the driveway of my house, so trying to do things that are sort of retail-oriented, not my forte. The only thing we did do in one of our vehicles was the Burger King transaction, which became Restaurant Brands, which has been obviously a huge success. But I won't take any credit at an operations level for any of that.
What about industrials? There's a lot of...
We like industrial. We like businesses that service products that look like consumer, but aren't necessarily consumer products. So we've been looking at things like packaging-oriented type companies, those kinds of things. But again, we're very disciplined. We've got plenty of time with our vehicle, so we're in no rush. When we find the right thing and our investors are supportive, we'll act on it.
I feel like we always have to do this when you come on. It's sort of a carousel of your various companies and interests. so let's move on to Nomad and frozen food, which has been a good industry for you guys in Europe, particularly where you're very strong there. Yep. What are the opportunities there? How do you play into this sort of big pivot that we're seeing towards health and wellness?
So look, we couldn't be more pleased with how Nomad Foods is developing. You know, the stock's more than doubled since we started this journey. The management team led by Stefan de Schumacher is doing a great job. I think there are two areas that we're sort of cognizant of right now. One is plant-based proteins, and so we have a big expertise in peas inside Nomad, and that's being developed. That's a big new product sort of introduction and launch for us. Obviously a frozen product. And the second is really getting our hands around on the supply chain side. When you do sustainable fishing, there's going to be price increases that are coming down the line, just given the supply-demand cycle. And passing those on to consumers are going to be something that is a process that's going to happen over the next couple of years, not just for us, but all the other suppliers.
So what do you mean by the supply chain side? Are you looking at specific
people
companies?
Wanting to eat fish than fish available in the ocean. If you want to have a sustainable supply chain, there are quotas. So those quotas drive prices.
So you're looking at transportation companies, or what do you mean?
Oh no, sorry.
Yeah.
I don't want to confuse this. The question was, I think, about Nomad Foods and what's going on in the business. It's not a question of that's not an acquisition. This is just part of operations. But what you're going to see is organic growth from a number of these companies because prices are going to go up on a number of frozen food items. I happen to think that frozen food is great value for money. Mm-hmm. It's one of the things that we liked about the business. If you actually go out and look at how much you pay for, a cod fillet, whatever. It's actually great value for money. Anyway, but it's something that is going to have inflation.
There is a potential acquisition now in the frozen food space. It was pointed out to me by someone this morning that a company called Picard, which is a competitor of Nomad in Europe, does a lot of frozen food, a lot of frozen fish, just like this, that they are on the block. Is that something Nomad would potentially look at?
We're familiar with Picard. Picard is a...
Picard. I said Picard. That was
I'm sorry.
Terrible.
I'll say Picard. Picard. It's a French company. But at the end of the day, it's a vertically integrated supplier. It's a retailer. So one of our, if you like, cautionary notes on that for us is that you'd be, in some ways, competing with your customers. So I'm not sure that's a perfect fit for us. The things that we have been buying, like Goodfellas Pizza and Aunt Bessie's Yorkshire puddings, and has really been a perfect fit. We'd like to do more of those kinds of acquisitions over the coming quarters.
I want to talk a little bit about credit and the credit cycle in a moment, but first, what about the sort of the reverse that's happening now, sort of trimming down companies? So GE, for example, what do you make of GE's situation, and can it be trimmed down to something workable, and quickly? Equally, Sears is a whole different ballgame, but
Well, Sears is a whole different ballgame.
Yeah.
But I do believe that focusing on narrow industries, this is what brought me to America, was the deconglomeration of American conglomerates that were built in the 1960s that were deconglomerated mostly in the 1980s, is a productive exercise, particularly if you have companies that have been stifled by corpocracy and are able to become better companies individually. I think that people like to invest in narrower segments, which is why in platform, we separated the ag business from our industrial business.
Which the market is not giving you credit for right now, because the shares have actually come off a lot.
But they will. And, it's very binary. The reality is I don't think that the mainstream investment community wants to invest in what's effectively a special situation play where you take the risk of the M&A completion. I think the reality is we are very confident, as confident as I think you could possibly be, of the completion of that transaction. But if you're an investor, you'd rather pay a little more for the company post a closing where that uncertainty no longer exists than beforehand. And I think that's why the company's valuation is dislocated right now. I'm in it for the long game, so it's fine. I
want to pick on something Vonnie mentioned. She sort of skimmed nicely over it, but Sears. We can't not talk about Sears. It's the sort of great disaster of the week in terms of corporate management. How do you view something like that from the outside in terms of the financial engineering that's gone on?
Well, look, first of all, it's a disaster that's been 10 years in the making. So you can't really look at it as a disaster for the week, in my opinion. I mean, I've been selling retailers through Jarden for the last 15 years, and I got asked actually by another hedge fund leader many years ago when the stock was 120, what did I think of that company versus Target? And my answer then would be the same answer I give now, which is in 10 years' time, Target would be a stronger, better, more developed retailer, and then the other company in Sears came out would not be a business anymore. And I think the reality is, for all the efforts, the seeds of its demise were sown many, many, many years ago. When you get to a point where retail stores are beyond any financial return for their investment, I think they're just impossible to turn around. And so, you know, at a time when we were selling $1.5 billion worth of goods at Walmart, we were selling less than $60 million worth of goods at Sears Kmart. And I think that sort of says it all. If you can't have the open to buys, to put the product on the shelf, to give the consumers what they want, it's just a matter of time. And so I don't, you know, I have a tremendous amount of respect for Eddie Lampert. He's been an amazing investor. He's made a huge amount of money. But, you know, turning around something that is almost impossible to turn around, I think is a tall order.